We know the coronavirus pandemic has caused some major ups and downs with the economy, to say the least. Some of the financial side effects a bit surprising, though. Local financial advisor Brad Allen with Drake & Associates joining us to share some of those money quirks, and maybe first and foremost the fact that there's actually some good financial news here, Brad.
You know, there is. Some people are saying 80% of Americans are saying that they're saving more money right now than they have in the past. And that could be due to, them looking at other folks that have maybe lost their jobs or maybe they were downsized. But the fact that we really can't do a whole lot right now, we can't go a lot of places. People are saving a lot more money over the summer, not going to festivals and all these different things.
Yeah, the fun budget has certainly been limited this year. What are some of the other financial side effects that you have seen from the pandemic?
Well, credit card debt is actually down right now. And consumer revolving debt is at a 3-year low, and it was actually at its peak back in February. Now, it's not great that people are spending less money in the economy, but it is good that they're tackling their debt and they're not taking on any new debt, right? So if you're somebody that's tackling debt right now, there's different ways that you can do that. There's strategic ways that you can do that. So you can do what's called a debt snowball, right? So if you have 3 different credit cards, take the credit card that has the highest interest rate, throw as much as you can at that highest interest rate, and then pay the minimum balance on everything else. Once that highest is paid off, you move to the next highest. That's a strategic way to try to pay down debt as fast as you can.
Yeah, smart approach to that. How about for someone looking to save a little more?
Yeah, savings rates are at an all-time high right now. Americans were saving more than 30% back in April. That went down a little bit to 20% in June, but that's still higher than the 7% that we've been seeing the past couple of years. And again, it's because a lot of folks are staying home. They can't go out as much and those kind of things. But saving is really important. We saw during the pandemic this year how important having an emergency fund is. Having that 3 to 6 months worth of expenses on hand, making sure that if something like this ever happens again, that you're going to be prepared for.
We certainly saw a quirk when it came to the coin shortage. So what are some ways that you can maybe benefit from that, or even look for coins of a certain type of metal?
Yeah, I mean, coin shortage right now, some banks and businesses are urging people to trade in their coins for dollars. And, the U.S. Mint production because of kind of things. And a lot of people are just staying home. They're spending money online, not going to the store, so to speak, on coin shortage. Also seeing a lot of people have possibly gold portfolios. A lot of people maybe lost a lot of money earlier in the year when the market went down so quickly. And maybe they realize they're taking on too much risk right now. They need to maybe diversify a little bit more. So gold's always been known as kind of that safe haven in a portfolio. It can be great to add to a portfolio, but you want to make sure that you're able to talk to somebody and make sure that you're working with a financial advisor to see if that is the right fit for you and your family, if that's the right fit for your portfolio. But putting a plan together, and especially if you're getting close to retirement, the more you want to start pulling back on the risk a little bit, making sure that you're not taking these big swings in the market, but make sure you're sitting down with somebody and putting a plan together on paper, because that's really going to help out in the future.
Very short on time here, Brad, but is there one kind of big takeaway you think consumers should leave this segment with?
Yeah, I think whether you're 20, 30, or you're in retirement already, putting a financial plan together, a budget, making sure you have all these different things. What are your goals? If you want to put a certain amount into your 401k per year, if you're younger, or if you need to control your risk a little bit more, if you're getting close to retirement, know where to draw from and all these different things, you want to put those plans together now so that when we do go through these volatile periods, you feel a little bit more comfortable with it. You feel a little bit more peace of mind because you know what that looks like ahead of time.
Some expert advice there to manage choppy seas during this time. Brad, thanks a lot. It's always appreciated.
Thank you. I appreciate it.